Are the bulls gaining strength, or was this recent move toward the top side nothing more than a bull trap? Where will the price likely go over the coming weeks, and what are the technicals suggesting? Let's go ahead and dive into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the recent price action of Bitcoin, what this crazy and sporadic rally meant for the price action. Did it break over any key significant levels? If so, what did that mean? And of course, how are the high time frame charts looking from a technical and structural perspective? Is Bitcoin still bearish? Is it still continuing downwards, or are the bulls reclaiming control? By the end of today's video, you should have a detailed and well-rounded understanding of not only the short-term price action, but of course the macro as well. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If you're interested in more of that content, join us on Telegram. It is the third link down below. You will get access to charts, updates, analysis, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, Bitcoin, and the relevant economic data. If you're interested in trading, join our VIP group. We post trading signals with exact entries, exact targets, exact stop losses, trade justification, and so much more, guys. You can find our entire trading track record in the free channel by clicking our links. If you're interested in getting access to the VIP, you'll also get access to 6 group chats: general chat, trading chart and education chat, news and trade setup chat, help chat, and video chat. If you're interested in getting access, contact me in the pinned comment in the free channel to go ahead and do so. Let's get into a video starting on the market data. How are we looking for today? So with just 2 to 3 days left in the month, September is very, very close to its monthly opening price. So sitting 1.27% in the green for the month. 24-hour volume is up 68%, sitting at a total of 67 billion, and 24-hour liquidations have seen a large move up of 203%, sitting at a whopping $90 million. Taking a further look at those liquidations, we can see quite aggressive liquidations on both sides of the coin here. We can see longs with 37 million in liquidations and shorts with over 52 million in liquidations. Looking at the recent price action, we saw an aggressive and abrupt rally toward the top side, retesting and deviating above that 26.7 to 26.6 resistance, actually meeting the upper level of resistance at 26.8. You can see how this 26.8 level has acted as resistance in the past, and we have seen once more we have come up and tapped that level before seeing a massive correction toward the downside. Now, we saw a lot of people enter late longs at the top of this move at the resistance, which was resulting in a large amount of long liquidations, and we saw, again guys, a lot of people entering late shorts all the way down over here at 26.2 to 26.3 at support, guys. We came in at this horizontal line, this dotted trend line, this support level. A lot of people entering late shorts over here, which in the last 4 hours have now resulted in a decent amount of liquidations, totaling around 7 million in short liquidation. So once again, retail are being fooled. They're chasing the market. And again, guys, they're falling for the same trap. And the trap really is stagnate the price action, send it sideways, surge volatility, surge volume, push the price up aggressively toward resistance. The average Joe does not know this is resistance. They just see the price going up. They think it's ultra bullish. They think the bull market's back. They jump in a long and they get liquidated as they are taking longs at resistance. The same traps over and over and over have been playing out in this range for now close to 2 months. And it's actually quite funny to watch, but at the same time, it is quite sad to see the price action being so sporadic because a lot of people are getting chopped up in this range. It's a very hard range to trade, but it is what it is. Moving over to our volatility next, we can see On the 30 and 60-day volatility index, the volatility for the 30-day period is still kind of pushing sideways, and on the 60-day period, it is still doing what it's been doing for the last 2 weeks nearly, which is basically been pushing sideways. Moving over to the DXY has seen a massive move toward the top side, actually breaking above that neckline of resistance. We can see a neckline over here on the weekly chart really quickly. We can see that neckline over here, which was at around 105.3, breaking above it, resulting in a nice move toward the top side again. This trend is looking quite bullish. However, guys, do not blind yourself to what the price action is doing. We are still in a rising channel formation. And although we came up and we reached our target, okay, we came up and hit this level, which was our target perfectly tapped it, we are still very much aware the DXY cannot invalidate the structure in which it is moving in. It could still see a short-term pullback. And if we do lose this uptrending trend line, that could result in a correction towards 103.6. Now, this is an unlikely scenario as of right now. While we remain above this trend line, it is unlikely. If this scenario plays out, meaning if we do drop below this trend line, that will provide some relief in the asset markets. However, while the DXY remains in this aggressive uptrend, and it is definitely an aggressive uptrend, it looks very bullish on the higher time frames, it could continue upwards. And if it does continue any higher, guys, we are looking for much more pain for cryptocurrency and for the stock market. Moving over to the stock market, S&P 500 is in a very delicate position. In fact, reaching our target, we talked about this target for months now, ever since all the way back in July. I've been telling you guys, we expect a retracement down towards 4,300, this golden pocket area, this area between, this confluence point, between this VRPV gap over here, okay, our horizontal resistance and our diagonal uptrending trend line. We see a perfect triple confluence point over here, which is where we came down and retested again. If we manage to fall below this trend line, that will result in a continuation lower to around 4,100 to 4,000, okay? It will do so. However, guys, support is support until it is not. And if we do see any potential or any period of time where a bounce is likely, this is where the bounce is likely to occur from. Will the bounce eradicate these highs and actually turn bullish again? Quite unlikely, but could the bounce occur from this level that could take us up to maybe retest the 50 EMA on the daily? It is possible. Keep an eye out for that nevertheless. So Dow Jones is leaps and bounds ahead of the S&P 500 with this correction. It has already broken down from its uptrending trend line. Of course, it is in a rising wedge pattern over here. And again, if we take that measured move of the rising wedge, which is going to be this distance over here, apply that to the breakdown point, we can see we generally come back down to retest this area of support. So 30,000 is going to be a high time frame target for Dow Jones if we do see an extended correction on the S&P, which will be perpetuated by the DXY rising. Anyhow, guys, let's go ahead and jump into Bitcoin. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. And to start off for Bitcoin, let's talk about the daily chart. But before we get into anything else, we need to outline the narrative of the price action. I've been talking about this for a very long time. When you're doing analysis, whether it be short term, whether it be macro, whatever it is, you need to identify the parameters on which the narrative is set, meaning the story. What is actually happening with the price action? Where is the price action going? What has it been doing? You have to set the narrative, the parameters on which you can do your analysis. Okay, so to simplify the chart to a base level, to an absolute base level, we have two key levels on this chart, which is going to be this red level over here and this green level over here. This is going to be our major bearish trigger, okay? Our major bearish trigger, meaning if we fail to remain above 24.4K, we enter a macro bearish trend. The same goes for 32K. If we get above 32K, this is going to be our major bullish trigger, meaning we enter a macro bullish trend. So if we really zoom out, the big battle right now is between this resistance and this support. This is the big battle of the price action. So zooming into a small time frame, how can we identify what the price action is doing and is likely to do? So currently we have to look at the current trend. The current trend is very obviously a downtrend. We have a downtrending diagonal resistance, which has marked a point of confluence numerous times over the last 2 months. We can see this downtrending trend line actually has been going now since mid-July. So what we can say right now is we are in a weekly downtrend moving into macro support. Macro support is support until it's not, and therefore we should not expect the continuation downward to occur until this level is lost. As we approach this apex, the apex being the point of convergence between the horizontal support and the extended diagonal support, the directional move becomes more probable, meaning as we approach this date, which is going to be around 25th of October, the likelihood for a breakdown and a break up becomes more probable, okay? Moving to the RSI, how can we predict the movement of this price action? If we see the RSI break downwards, that could be an indication of a loss of momentum. This trend, which is kind of trying to push upwards a little bit, will exhaust and we will take another dive into that support level. Here is the thing, guys. Based on the higher time frame charts we'll get into a second, if we retest this support with the level of macro weakness that we currently have, there's a very low chance we do not break below that support, okay? So keep that in mind. So to summarize this chart, guys, for the bulls to take control on the macro chart, 32K is necessary. For the bulls to take control of the current high time frame downtrend, we need to break above this downtrending diagonal trend line, okay? We can validate this breakout later on. We'll use RSI, we'll use CBD, we'll use all these different indicators to assess the likelihood of the breakout being a valid breakout or not. However, until we break that point, we are in a downtrend, okay? And for the bears to push the price much, much lower, we need to break below 24.4. So if 24.4 breaks, where is the next target? We are looking for 20,000 to 18,000 essentially. There's a massive gap just below this local low point, which is going to be below of the head and shoulder pattern, okay? Inverted head and shoulder pattern. So provided we fail to break above the downtrending trend line, that will be the target, provided we fall below 24.4K prior to breaking above the downtrending trend line. Let's take a look at the high time frame. So monthly chart is got a couple days until the candle closes. It is not looking fantastic again. If we fail to get this monthly candle close above 27.2K, this is going to be printing a weak close. This is going to be quite bearish. It's going to indicate again we had this nice strong bullish or bearish surge in the last month. Okay, we're seeing consolidation above these local low points, local high points, and that could result in a full-blown reversal for the price action and continuation lower. Again, for strength to be present on a monthly chart, we definitely want to see a monthly candle close above 27.2K. Moving over to the weekly chart, again, a whole bunch of indicators are here suggesting weakness. We have our bull market support band first and foremost. We can see on the last 24 hours, we saw a strong wick upwards that reached around 26.8. 26.8 was not quite even into the bull market support band, it reached this red line. Actually, going back to the daily chart, we can see the candle actually came up and retested that 50 EMA, acting as a resistance once more. But moving back to that high time frame chart over here, we can see with that recent surge in price action, not too much has really changed. We saw a wick up to this red line again, not really showing any strength. For strength to be present, we do need to start breaking well above that bull market support band. And more importantly, guys, for high time frame weekly strength to really kick in, we need to get above 28K, specifically 28.4K. That is the key level we need to break above, which is going to be the upper band of the Gaussian channel. If we are able to get the price back above this level over here, that is going to show significant strength in price action, and that will result in a continuation higher. Until then, while we remain underneath this cluster over here, that is suggesting weakness. Negative momentum, falling momentum, okay? Weekly weakness relative to our prior price action, and of course, the price action is in a weekly downtrend. It is very unlikely the trend will reverse until we start clearing some of these diagonal resistances. So that brings us to the small time frame chart. What has happened in the last 24 hours? What does this mean? So when in doubt, I always say zoom out. And this is why it's so important when you're doing short-term analysis. Even when you're looking at, let's take a look at this, for example. When you're looking at the 30-minute chart and you try and take a trade on the 30-minute chart, it's so important you don't just cut yourself off and take a look at this. If you see the price action moving up and you have no data of that, zoom out. Take a look at what happened at this range in the past. We can see we had numerous points of resistance over here. We had a clear area of resistance, okay? A demand zone. We saw the price move up above, okay? We saw it correct back below. If you were entering late shorts or safe shorts, you could have looked for shorts as we broke back below this cluster of resistance. That would have indicated this is deviation and this move was going to correct. If you were like me and you were quite aggressive with your entries, I took an entry around 26.802, just slightly above this level, because I was anticipating our resistance, which was this level, to remain as resistance until it is broken. And therefore my probabilities of a rejection at this point increase over my probabilities of a breakout, and therefore I took a short and it played out in our favor. So as you can see, guys, if you did zoom out, you can see the price action tapped this level of resistance perfectly. And as we've been saying in the last couple of weeks, when we enter a horizontal level, if we have broken above it or deviated above it, and then we break back below it, the moment we break back below it, we enter a downtrend. And the downtrend remains a downtrend until the price action can reclaim the point of which the trend flipped. Therefore, we are currently still in a downtrend. We are in a downtrend and we have moved into an area of support. So for the continuation lower, as we've been saying, nothing has changed. We need to see a loss of around 26.2 to this 26K level for the price to move and deviate back down to 25.6. Until then, expect sideways chop at support. It is completely normal and completely expected. If we do zoom out a little bit more over here, guys, we can see that this move wasn't really indicative of any strength. We saw a retest of resistance, and that is really about it, guys. If we go back to that 4-hour chart, we can take a look at the current price hourly chart. Let's go back to the hourly chart. We can take a look at the current price action. You can see we're just really chopping in this range game. We're not really doing too much right now. We've seen, again, a lot of longs liquidate on the top side, a lot of shorts liquidate on the top side, a lot of longs liquidate on the downside. We're really just grabbing liquidity now. If we are looking for the next move downwards, again, look for shifts in momentum. If we see the RSI drop below this level, that is going to be a definitive shift in strength. It is going to signify significant weakness, and the price could definitely come back down. If we're looking at this smaller time frame, again, I'm really not looking at too much. I'm looking at these prior high points. So looking at these prior highs, we'll go ahead and draw them in. These prior high points over here, you can see resistances again, resistance, support, okay, resistance. We broke above it, we went very volatile, so we know this is a trigger point. We've come up and retested, and therefore we could look for some shorts over here for corrections toward the downside. But if we do break above this level, and we show strength above this level, more importantly, that could result in a move back upwards. We could be looking at 26.5 again, okay? We're going to be looking at touching these high points, so 26.5. So again, guys, on the short term, what are we really seeing? Well, we're seeing price action move up. We're seeing the RSI move up over here, okay? We're seeing some divergences play out, okay? We're seeing this trend develop. We're seeing the bulls attempting attempting to regain some strength and push the price upwards. However, they're really not doing an amazing job at it. So look for potential rejections, look for reversals, look for short-term corrections. As well, look at these trigger points. And if you do see bounces above these levels, you could be grabbing some very tight stop loss longs to retest 26.5k. Until then, resistance is resistance. Until then, if you're confused, zoom out, understand we are in a downtrend. Nothing is looking particularly amazing. There's absolutely no reason the price will go up here until we start breaking above this downtrending trend line. Remember, a lot of people are wondering, Whale, why on earth's name did you primarily take shorts this month? If you look at my VIP trading record and even my personal trades, well over 100 trades this month, most of my trades were shorts. And this is why. The reason why I take shorts is because we're in an overall downtrend. So there's going to be naturally more inclination toward the downside than there is going to be toward the upside. If we take a look at that price action and every single upward move, 90% of these upward moves, this one over here, this one over here, these ones over here, they're either deviations or they're based on news events. Even this one over here, guys. Every single upward move this month was either a volatile news event that will happen over an hour, very quickly, up and down, or was deviation from our current range. We haven't really seen too much bullish strength. In fact, if we go back to those high time frames, we actually just see weakness. So there's no reason to be hedging too aggressively in the long side right now, while the overall narrative is still in a downtrend. If that changes, if we break back above here, then I'll be taking significantly more longs and shorts, provided that breakout is a favorable breakout. And I'll also like to say, guys, I was on Twitter yesterday for God knows what reason, and I saw a ridiculous amount of posts from these big Twitter accounts, 180k followers. I'm not going to call anyone out because I don't do that. 180k followers, 200k followers, saying, right at the top over here, as the price was moving up, peaking, oh, the bull run's back, the bull market's officially started, blah, 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 yada, yada, yada. I'm thinking, you guys are actually blowing smoke in people's faces for engagement. It's absolutely insane that some of those people can jump on Twitter with 200,000 followers and tell people the bull market is back, when if we take a look at the 4-year cycle in the bull market, there is literally nothing right now that is suggesting the bull market is back or the bull run has even started. Okay, so be very careful about emotions, be very careful about what you want to happen, not mixing what is happening, and be sure when you're looking at the charts, you remain completely objective. Okay, the markets don't care what you think, the markets don't care if you want to go up or down, it's going to do what it's going to do. So you can either get on board with that, stop lying to yourself, and be objective with what you think, and make money, or you can live in your own cloud world, blowing smoke in people's faces and lying to yourself so you feel good while you get wrecked slowly over 2 years. It's up to you guys. Make sure you do the best thing which is for you. Be honest with yourself. Stop lying to yourself. Stop listening to these clowns that are trying to lie to you, okay? I gain nothing from lying to my audience. Everything I tell you is what I fully believe, and more importantly is what the charts are suggesting. There's nothing I get from lying to you. I will never blow smoke in your face or ever hype anything up for no reason, and anyone who does so should not be someone worthy of your following, okay? Thanks for watching. I'll catch you guys on the next one. Cheers.